Good morning, welcome to this Phoenix Will update on Friday the 2nd of June. I'm Tom Colley presenting today. Non-farm payroll day again. We go through this obviously every month. We have to be careful ahead and through the announcement. We expect volatility, even if the figures are not particularly deviating from the forecast. We are very aware that there's a lot of anticipation in this, so it's a day that many traders choose not to trade. Yesterday we had another significant event from President Donald Trump. He withdrew the US out of the Paris Climate Accord. That means they will no longer have to meet climate protection targets. We will see when we look at the charts that that's seen a significant benefit for the stock exchanges, in that the costs for American businesses will in the future now reduce. There were significant costs to many businesses based on meeting the criteria of the accord, and with that no longer in place and also boosted by power and mining companies of coal and things like that, and we've seen a rally in stock markets on a worldwide basis as they follow American stocks. Okay, before we do anything else, let's have a look at the news that we saw through yesterday. The manufacturing PMI for the UK came in virtually bang on target. We had a big figure for the ADP non-farm employment change, which can often be used as a guideline to what comes later this afternoon. US unemployment claims, however, were slightly higher than anticipated, came in at 248K rather than 239. And then we had ISM manufacturing PMI coming in around the range of the forecast, 54.9 versus 54.7. We saw crude oil inventories come in with a bigger reduction than was anticipated. We anticipated, or the market anticipated, that stocks would reduce by 2.7 million barrels. They actually reduced by 6.4 million barrels, a significant reduction. However, we've continued to see a sell-off in crude. Crude is this morning below the level that I showed you earlier the week of $48. That was the level that the price was before the initial OPEC Russia production cap agreement. As I said earlier, if we get a close below that $48, I'll be bearish that market following the agreement last week, which was extended for a further 6 months. We obviously had the speech from Donald Trump, much to the disappointment of most of the rest of the world. There were nearly 200 countries that were part of the Paris Climate Accord. Trump's pulled the US out of that to very mixed results. The rest of the world, including the UK, China, criticising the action of the US in that respect. But the power industry and people watching employment in the US seeing that as a positive move. So what we've got ahead today, it's Italian bank holiday, doesn't have a great effect for us. We've got construction PMI out of the pound at 930. Trade balance for the Canadian dollar coming in at 130 at the same time as we have non-farm payroll. We are this month looking for a forecast of 181,000 job increases. We saw 211, which was a substantial beating of last month's forecast. And we'll also be interested in the average hourly earnings and the employment rate, looking at those as a picture. We also need to keep our eyes open on revisions to any of these figures. They can get, as more up-to-date data comes for the previous month, we can see these revised up and down. So we will need to build a picture across all of those. The key forthcoming aspect for relating to this data is the FOMC meeting on the 14th of June, where the market is still anticipating a 0.25% rate increase for the US. The last FOMC minutes which were released last week did, however, appear dovish over future rises after that June increase. So the market at the moment believing that we will get that June increase, pricing that into the market, but also backing off the expectation there was previously of a September additional rate increase. So that's really what's playing out here. I think that it is what these figures can give us in terms of a longer term picture. We've had some very mixed data out of the US over the last month. Really, the markets are going to look for something positive here to put some sort of belief back into that September rate hike. Okay, over to the charts. Dollar index here, very much caught in this box range here. We've got a commitment of traders signal. We're sitting currently above $97, but clearly we're in a ranging market there. We look for potentially some strong data or some weak data on non-farm today to break this market one way or the other. Over on the yen, again, we've been very much ranging, although yesterday and overnight we have seen a bullish move on the this yen chart. That would be a weakening of the yen versus a strengthening of the dollar. We will see shortly that that's also been replicated by the Nikkei Stock Exchange, and we believe there's an element of that is based on the Bank of Japan buying more bonds this month than they have done in recent months, in an attempt to devalue the yen further, potentially. Okay, over on the euro, we're seeing again very obviously the inverse of the dollar index. We're clearly testing this level at 1.12580 at the moment. There's another level I've got through here, let's call it 1.13, which is around that tip there, which was the high of the day of Trump's actual election. So in itself, certainly intraday, very significant. We have potential for a head and shoulders here. We'd be looking next for a break of this 1.11 level here for a pullback, retest and trade to the short side. We've got a commitment of traders short alert there. So we will be looking for the non-farm payroll potentially to give us some direction there. A break of this 1.13 level would see my next level being 1.145 as being the next potential level for a short. Over on the pound, we saw a sell-off last week. A breakout of this rising channel here. The day before yesterday, we retested this channel. We had a trade short from there. We got a stops at break even. We took some money off the table. Price came back towards our break even stop and is currently hovering around this zone here. I anticipate closing that trade out before non-farm, simply because it's so near to the break-even point. We might as well take a small profit there. We don't know what's going to happen. We could effectively have non-farm not moving price very much, but we have risk of volatility stopping that out, so no point staying in that trade at that moment in time. If we can see some dollar strength, that would be interesting in this market, because we'd see a break below this 12775 level here, which is a very clear level. That would give us a confirmed lower high here. We've got a cut extreme signal, short signal here, so we would be moving into a downtrend. We would then be looking for a pullback into that level to take this market to the short side. Obviously being very aware that Thursday is the general election in the UK, so the timing of that would require caution, certainly into the middle to latter part of next week. Over on the Aussie, interesting currency at the moment. We've had a bearish week. We had two strong bearish days yesterday and the day before. The Aussie has been the weakest of the majors and minors this week. there has been a big significant fall in the price of iron ore recently. Australia's major export to its major buyer, which is China. There's uncertainty about the Chinese economy still, and there is even talk of a potential recession in Australia. Australia's managed to avoid a recession for the last 20 years. There is even talk of this being the only economy with any potential for a rate reduction within the next 12 months. These are the current central bank rates we can see here. All through the very low rate period we've been going through, the Aussie and the Kiwi have been head and shoulders in terms of their rates ahead of the rest of the world. We're now seeing a catch-up on the part of the US dollar. We're anticipating a further 0.25% rise this month. So we can see that disparity between what were, let's say, the low interest rate countries or economies and those two higher ones are diminishing all the time. So if we were certainly to see any rate cut in that, we could see a significant move to the downside. So this is the market we will be watching. We have a commitment of traders, a long alert from last weekend. This is only at this stage, or last week was only a 90% alert, which means it's only the beginning, a heads up. So that will be very critical data, what we see there this week. If we see that percentage rising towards the 100%, then we have potential for this level through here at 73.35 being a bottom. If we don't see that, then our focus for a bottom in this market would more likely be down at this lower level here at the 71.60 sort of level where we last had the COT extreme that the market reacted to. So this COT extreme, this position is at this moment a heads up. As I said, depending on that data, we may see further short side in this market, and this may be a market even if we don't get anything significant from non-farm payroll, which will give us some decent opportunities next week to the short side. Okay, I mentioned stocks. Here we have the FTSE, the S&P 500, the DAX, and the Nikkei 225. I've already mentioned the Nikkei 225. We broke through this very key 2000 level overnight. We will basically, as this market followed the American stock exchanges that made new all-time highs yesterday and today are still making further highs. As I said, I believe that's because the costs of the Paris Climate Accord have effectively been removed from US companies, giving them the opportunity of being even more profitable without those additional costs. In the Nikkei 225, we've got what we normally see, which is this market following the US stocks, but in addition to that, I also mentioned that the Bank of Japan has bought more bonds this month than in recent months, in a potential easing maneuver to try and weaken the yen against what's been a weaker than expected dollar, and the correlation between the stocks and the currency would lead us to expect the move that we've had there. Clearly there'll be an opportunity for pullbacks in any of these markets. Again, a new all-time high we're seeing today on the FTSE, so the same would apply, although we've got the election next week, so caution required there. The DAX representing a relationship with the euro here, very much in a ranging scenario. It hasn't made a new high. We'll be looking more to the low side on this market to see what happens, and if we see a break to the downside in this market, if we get dollar strength out of non-farm payroll. Okay, guys, that's it for today and this week. Just a reminder, our next free trading event in London is Wednesday the 14th of June. You can contact us either through the contact page on the website or directly at info@phoenixblue.co.uk to get some joining instructions and an invite to that event, when you'll have the opportunity for trading live alongside the Phoenix Blue fund managers, and also learning more about how we analyse the markets technically, fundamentally, and how we analyse the commitments of traders. Okay guys, have a great weekend and we'll speak to you again in the morning. Take care, bye.